I think if we do see a double dip recession, I think it's going to be a lot deeper, a lot more severe than what we have seen over the past couple of years. This recovery at the moment is artificial. It's brought on by huge amounts of lending, huge amounts of liquidity. So if we do see a double dip, it will be severe, and stock markets around the world, especially emerging markets, which funnily enough, the emerging markets are the guys that have played by the rules, and you will see the emerging markets being sold off the most.
How do you keep yourselves motivated as value investors when you look through all this noise, and if we do see a substantial correction across the markets, you've got to keep your head down, and how do you shield your clients from the panic that they're going to feel?
Generally, during recessions, value investors tend to outperform. That was very different this past time, but looking back over history, value investors outperform during recessions. The nice thing about recessions for a value investor is you can pick out extremely cheap opportunities at the bottom of the recession. If we look back to March last year, March the 30th, around the end of March, if you had invested there, you would have made a hell of a lot of money.
So generally, you are going to be smiling if we see a big sell-off.
I wouldn't say we'll be smiling. We'll probably be smiling at the end of it, and we would like to think we would outperform. If history repeats itself, we'll outperform your growth managers.
If the double dip recession scenario is on the cards, what timing are we looking at? Is this it? Are we about to enter into a double dip recession?
I don't think anyone could say when it would start, how long it would be for. I think it could be longer than what you've just seen.
In terms of the South African market, the best way to shield yourself, tell us as a value investor where you are significantly invested.
At the moment, we are still overweight financials, and we remain overweight industrials. We have been decreasing those positions. We are therefore underweight resources at the moment. We have been decreasing our underweight exposure there, increasing our exposure to resources.
Andrew, thank you very much.